So as part of our ongoing series, Tea Talks with OnLadder, we dive into some of the most pressing issues in the mortgage and property markets. And one of the more pressing issues currently is the chronic undersupply of housing in the UK. Mortgage borrowers are currently seeing rising prices at the pump and in the supermarket. But are they really seeing the chronic undersupply in the market? For that, we brought in Mark Prisk, former housing minister, former MP, and housing expert, to really dive into this issue. So, Mark, I think where we should start is, who is Mark Prisk? Tell us a little bit about yourself and your background.
Sure. So I qualified as a chartered surveyor back in the dim and distant past in the 1980s. I developed a business that was really about urban regeneration. Did a lot of early work actually in London Docklands, so we're long before Canary Wharf existed, which shows how old I am. But I then, having set up my own business for 10 years in that real estate field, went into politics in 2001. Member of Parliament for 18 years for a constituency in Hertfordshire, and then became a minister, particularly a construction minister for 2.5 years, and then housing for another year. And like most housing ministers, didn't get that long to do the job, but it sparked a continued interest in it. And when I left Parliament in December 2019, I've created a portfolio career now. So I work in both residential and commercial real estate markets as a non-exec, as a strategic advisor, and really looking at how we can tackle that issue you just raised, which is how do we unlock the potential for housing supply, not only in home ownership, but right across the market.
I guess a good place to start after that is, where are we right now? There's currently a huge affordability problem in the market. And a lot of this has to do with things that we've already mentioned, rising interest rates, rising cost of living, dramatically rising house prices. But this chronic undersupply it's really providing a floor underneath prices. Could you go into a bit more about that?
Yeah, sure. I mean, in one sense, it's not new. We've probably, if the truth be told, failed to build enough homes for 25 years. So the cumulative impact only gets worse, of course, as each year passes. So you've got that. You've also got the fact there isn't actually one housing market. People don't buy anywhere across the UK. They'll buy in certain geographical areas. So that makes any shortage worse, because where the areas are of greatest growth will be where the demand for housing will be at its greatest. So if you've got a difficult market as a whole, if you start to drill down and look at actual locations, it gets even more acute. And you can see that whether you look at London or you look at right across the UK as a whole, where the growth in the economy is, where people are wanting to live, inevitably that's where the house prices have been rising. And I think because we're not building enough, and because, as we've seen with the population numbers, we're growing rapidly as well, you've got this tension. So despite the fact that affordability ratios at their worst level, there's still this high level for demand. And so you've got these two things pulling, which I think mean that the market is going to continue for the next couple of years, I suspect, to show real signs of tension. And I mean, there are a number of issues, and we can go into them in terms of planning, in terms of building costs and so on. But that's kind of, I think, the background of where we are now.
Yeah. So it's more, what you're saying is, everyone talks about it as like a national problem, but really it's more localized, and it comes down to specific areas of the country where there's a big supply and demand, gap.
Yeah.
But what would be some of these areas?
Well, I think we're all familiar within London that although lockdown has distorted the pattern and flow, so there was clearly a certain period in 2020 when you could see London was tipping downwards. And I think in terms of house price growth, it's still behind the rest of the country. Nevertheless, that's from a higher base. And so inevitably, it's still, what is it now? Halifax have said it's something like 9 times a typical person's income in terms of trying to borrow. So that is a very acute issue. But it's also, I think, in growth cities like Bristol, we're beginning to see it more in Manchester, Leeds, and the home counties as well. There was, of course, during lockdown, a shift away from feeling the need to live in zones 1 or 2, or indeed 3 or 4, and actually thinking, well, actually, maybe if I lived out in Woking or in Crawley or Brighton or wherever, then I could commute in and I can get something bigger. So that constant tension we've seen in the southeast, which is the calculation between my mortgage costs and my traveling costs, of course, has been upset by lockdown because people have suddenly thought to themselves, actually, I can now live further away and my travel costs can be lower than they were before lockdown because I'm now able to only go into work 1 or 2 days a week. And that's, I think, going to change the calculus for a lot of localities.
Yeah, that's actually an interesting point. As people have moved out, and as things have started to actually normalize, with the vaccine rollout and all that, it seems that, and the rules being, sidelined, it seems that there's a lot of people that have moved out, but are now having a little bit of buyer's remorse. Do you?
Oh, that's true. Yes.
Yeah.
I mean, in anything which affects every single household, which is very rare actually in our society. You can have an economy which may be in difficulties, but there'll be a proportion who can actually weather it. But the pandemic meant every household had to close down. This is why a lot of people in my age bracket, the sort of 50s plus, have actually stepped out of the labour market altogether. It's one of the reasons why the labour market is as tight as it is because actually a lot of people have reflected on what they want from their life and are making different calculations. Now, what does that mean for housing? I mean, I think there still is an imbalance between the supply and demand. I found as a constituency member of Parliament, the way to get people who perhaps were categorised as NIMBYs, wanting to say no to housing in their area, was to show them that actually not only were their children still living at home longer, but their grandchildren were now living at home longer because they simply couldn't afford to live in that locality. And I found that was the way to get those people to realise that actually there was something systemically wrong in the market. And it is partly to do with planning. It's partly to do with the concentration of demand in certain localities. And I think also we have tightened the rules on mortgage availability. The Mortgage Market Review did make it tighter than perhaps people were expecting, and that I think may have added to the whole mix of lack of affordability.
Yeah, certainly. The planning permissions are definitely an issue. I think the Bank of England kind of acknowledged that maybe they went a bit too far back in 2014. I think some of these rules, the stress tests, so testing borrowers at 3% interest above the SVR, but then also the loan to income ratio. They actually recently just took away the stress test.
Yeah.
So allowing lenders to just follow the FCA's guidelines for 1% above SVR.
Yeah.
So they're still getting stress test, but it provides a bit more flexibility for lenders, and it could help first-time buyers to get that.
Well, and I think, the changes were needed. So that when the changes were made, and I was party to those conversations in that sort of 2012-13 period, one of the things was that before the financial crash in 2008-9, if you were self-employed, you could self-certify your own income. Yeah. So you only had to stop and think about that for 3 seconds to realize that in a market where you really wanted that house, you would magically make your income meet the number that it needed in order to do the multiplier. So changing that rule and making sure there was a bit of objectivity was really important.
That in of itself, like that, maybe some of the rules that they put into place weren't exactly needed. Maybe that was just a big part of it, was just making sure that everyone was properly reporting their income, and like that was a good way for that provided a bit more certainty when lenders were conducting their underwriting processes. Yeah. Maybe things would have been more accurate. Maybe we wouldn't have had as many problems as we did back during the financial crisis.
Well, you often get with policy, you get things are too lax, so the rules have to come in after a period of debate, and then the pendulum swings a little bit too far the other way, and the rules get a little bit too tight and a little bit too strict. And it's getting that right point where you're making sure you're encouraging sensible behaviours, but you're not being so restrictive that you're preventing people who can legitimately go forward and buy a home. Is getting that right is often quite difficult in a national market.
Certainly, and I mean you could see this play out when they removed away the stress test. Well, not removed, just 1%, not 3% anymore. You could see in the property experts, mortgage experts across the spectrum, like some of them that weren't necessarily as knowledgeable about the subject, they look at it and they're just like, oh my God, what are they doing? It's like, are we just house prices are at all-time high? Are we really going to remove this rule away in order to bump up prices even more? That doesn't seem very responsible on the outset. But if you dig in a bit more, like the things that we're talking about, it's really just providing a bit more flexibility for lenders. And it's not, but I think that kind of speaks to what you're talking about with the pendulum and all that. It's tough because of public opinion definitely feeds into that. And people still are, people that were around at that time, were working at that time, they still have that semi-PTSD associated with what happened during the financial crisis.
Yeah. Well, and it's natural because if you've been through that process, you've seen people go bust, having to hand their keys in.
Yeah.
You kind of want to see if we can avoid that. And the good thing with the furlough, for example, this time round, and indeed during the financial crisis in 08-09, was that because the mortgage arrangements and the lenders had changed their regulations, so they would always do their level best to try to make sure that a family could keep the roof over their head.
Right.
That was kind of the priority. Then that actually avoided what we saw in previous financial crashes, where people lost their jobs, they couldn't afford to pay the mortgage, they had to hand the keys in, and they became homeless. And then the state has to pick up, all of that problem, as well as the terrible stress that causes for the families. It's far better, if you possibly can, to make sure that a roof stays over someone's head, even if, for a period, they don't have the income to pay for it.
Right. And that's something that I really love about the UK, the UK mortgage market. It's just that it's about the outcome. It's about keeping people in their homes. Nothing is ever going to be perfect. There's always going to be issues.
Yep.
There's always going to be adverse scenarios that borrowers find themselves in. But I think that general top-down focus on the outcome and keeping people in their homes, whether it's the FCA, whether it's government, whether it's the industry, mortgage lenders at large, they all seem to be, like, since the financial crisis, they all seem to be on the same page. And that, this is something where it's going to be messy. It's not going to be in our short-term interest, but long-term, this is something where it just makes sense for everyone involved in order to find solutions to do this.
Yeah, I think that's right. I mean, I suppose looking at the other regulatory area, because mortgages obviously is very important, but planning is much more vexed in the sense that actually one of the things that isn't terribly sexy in political terms, but actually is important, you can change the rules, but the truth is we've got too many small planning authorities that are inadequately staffed. They can't cope. And so the backlog is partly a process issue. It's not just about the policies or NIMBYism or whatever. It's that you've got lots and lots of quite small planning departments that just don't have the people they need to process the volume of applications. And particularly if they're dealing with, say, a big major developer who's got 1,000 homes they're bringing forward for a new development, there's a lot of stuff they've got to cover, environmental rules, they've got to cover water, ground conditions, they've got to cover a whole raft of specialties. And that local planning authority often doesn't have that specialist. So they pull that person in. And of course, that person is self-employed because they're working for 16 other authorities, so the queue gets longer. I had a classic example in Bishop Stortford where there was a 500-home development. Generally speaking, the community were on board because there were good infrastructure relations to it. But it took the county council and the district council over a year to negotiate what the planning gain, what monies that would come from the developer to the community would be, and what they would spend them on. And in the end, it took so long, the developer walked away. So it's one of those, and the reason was that both authorities couldn't afford or hadn't actually got sufficient experts in the field they needed, so they had to get them on the basis of self-employed when they were available. And this is the sort of thing that used to drive me crazy, both as a constituency member, but also then as a housing minister, which is, guys, it's this nuts and bolts stuff which very often is at the heart of the problem. So, I think there are undoubtedly planning rules that need to change and some more common sense brought into certain areas, but it's also about when you're in that negotiation process between the developer and the planning authority, that the two sides are both capable of dealing with, the job in hand. And at the moment, and it's got worse, I would say, in the last 5 years, the local planning side is really struggling. And that's why the backup, that if you just ask, we know about the NHS backlog, you should see the planning backlog.
Yeah. What we were talking about before with regards to the mortgage market and making it more resilient, one of the things we mentioned was around self-certifying income.
Yeah.
And changing that from self-certification to we're actually going to do due diligence on this borrower. That seems like a very simple thing, a very obvious thing that can be done in order to alleviate some of the problems with underwriting. Is there something very similar that could potentially be done on the planning side? Something
Yeah.
just completely obvious and easy for people to do?
Well, I've always taken the view that in and the government was edging towards this, but they kind of went a bit too far. They were basically saying that what we'll do is we'll zone an area, and we, central government, will decide what the categories are, and then in that zone, you will automatically get permission for certain things.
Yeah.
And the community would not be involved in it. And the problem with that is that it meant wherever you lived, anybody from anywhere could apply, and you have no say in what it looked like or what the provision of infrastructure or public facilities would be. No say at all at any stage. And that, I think, incensed people. What you could do is zone areas, working with a local authority and saying, where do you want to set your growth areas? So a lot of town centres need to be regenerated and repurposed.
Right.
And what I tried to push forward was to allow all the local authorities to designate what is your central business district, to take an American phrase, in your town. And in that CBD, you should be able to designate that you're prepared to see this scale of development in terms of size and this number of units. And beyond that, then you automatically have planning permission when an applicant makes so that you jump over that hurdle.
Gotcha.
There is building control, and that's the other side. And of course, with the fire at Grenfell and other problems that has then thrown up, we need to simplify that a little bit. And that, again, I suspect is what we're doing, is we're going from where the rules are a little bit too lax in terms of building control to where they're probably going to be a bit too stringent. And so this is going to slow development again.
Yeah.
So, and it's a tricky one because it's about safety.
Right.
And people are naturally and rightly sensitive about it. But my concern is, I run the government's loan guarantee scheme for affordable homes. And it's a £3 billion scheme. And when we're talking to the major housing authorities, the housing associations, they have now got substantial additional costs just to refurb and bring up to speed their existing stock, never mind building a single new home. So this is going to impact on the supply of affordable homes, which will knock on into the private rented sector, which inevitably will have consequences for home ownership. So all these things are linked.
Yeah. That's an interesting point, actually. I mean, that's something that we've found as we've gotten further along with OnLadder, is just how interconnected, the different markets are in housing. It's not just about us being able to provide a deposit to first-time buyers to make it easier for them to get on the housing ladder. It's like, do they have the requisite savings to get that 5% that we require? And that actually is partially it partially has to do with what are they paying for rent in the rental market before they get to the ownership market.
Yeah.
Is that something you could speak to?
Yeah, I mean, I think one of the things I've always taken the view that actually we had a private rented sector here which was dominated by build to rent, so buy to let rather, and buy to let is fine in one sense, but it means you've got a lot of what we call amateur landlords, people they've got a bit of savings and they thought, well, I can stick it in a bank account, or actually what I might do is I'll buy that flat in Blackpool or wherever, and that'll be my pension income. And the problem is they probably then live 200 miles away from it, and they're not very up to date with what the rules are, and they probably haven't got the right fire thing in and all the rest of it. So there's a lot of problems with that. Now, what has happened is that build to rent, where the major institutions have come in and said, no, actually, we're going to build purpose-built homes for renting, and they're designed for that, and they're much more flexible, and we want 3-5 year terms. That, I think, is going to help. And the changes that Michael Gove is talking about at the moment in terms of the private rented sector, I think are going to nudge a lot of the buy-to-let out, and those properties, which are very often very popular for first-time buyers, 1-2 bedroom properties, will start to come onto the market more, I think, in the next year. So that there is a glimmer of hope in terms of stock.
Yeah.
Challenge, of course, is finance. And that's where OnLadder, I think, has brought a really strong, innovative idea to the market. I mean, I was trying to tackle this back in 2012-13 when I introduced as the housing minister the Help to Buy deposit scheme. Now it'll have lasted 10 years, which is probably far too long. But the idea then was to plug the exact same problem, which is how do you get over that hurdle of saving up enough deposits when house prices are so high? And so the idea of the Help to Buy deposit was really to try and plug that gap for those people who can't ask their parents for the money because their parents haven't got the money. It was trying to find that gap which wasn't trying to push people into homes that, frankly, they could never afford.
Yeah.
It was trying to get them over that barrier,
Right.
which I think is the critical barrier.
Because, I mean, what we found over the past, really since the financial crisis, this new era of low interest rates, it's not the mortgage payments that are the problem. The mortgage payments are historically low,
Yeah.
as are the interest rates.
Yes.
It's really about just can they get the sufficient deposit, sufficient savings needed in order to get on the ladder. So Help to Buy was, in that regard, was extremely important, and it led to 355,000
Yeah.
first-time buyers, or mostly
Yeah,
first-time buyers,
80%, yeah.
80%, yeah, who wouldn't have gotten a home otherwise.
Exactly.
So not everyone has the bank of mom and dad to help them. So, but yeah,
But I think it's gone on too long, and I can
Yeah.
say that. I mean, obviously, it was introduced in the budget, so it's the Chancellor that gets up and says it. But it was Muggins, as the Minister of State, who had to run around to make sure that actually, when people went in and said, "What's this Help to Buy thing?" locally to the local mortgage providers, they would say, "Ah, yes, we've got the information and we've been briefed on it." So I had to deliver it. But the idea was, this is 2012, 13. The idea was to take it through for 5 years or so that we could just plug that gap until supply started to come back up and the market leveled. But unfortunately, the market, the population continued to grow.
right,
And the supply just never quite got to where it needed to. So there was a nervousness. It's always a problem for governments. Once you introduce a financial incentive,
yes,
when's a nice time to take it away? Well, there's never a good time. There's never a
Right.
popular time because people get used to that.
yeah,
And they think then you're taking something away from them. Well, they
Right.
didn't have it in the first place.
Yeah.
So there's always that problem for a politician, which is you give people a financial incentive to get over a certain problem, and then it kind of, in people's minds, becomes a permanent thing.
Right.
And then they want the next thing. And at some point you have to say, I'm sorry, but this is designed just to solve this problem. It is not a permanent idea.
And when you take something like that away, it's the follow-up question is what's going to replace it and when?
Yeah.
And it's you take something like that away, something is not going to come right into the market right away in order to replace it. That's just not the way things work, and especially not in the mortgage industry. It's tough to to get anything across there because heavily regulated industry. It's tough to it's tough for banks to move around their processes in order to account for new innovations. So it's a bit of a it's I don't blame the government for waiting as long as they did, but now it is going away.
Yes.
Now it is going away.
In theory, next March
Yeah.
23.
Yeah.
Now that means, in effect, October is really the sort of cutoff point.
Yeah.
So suddenly it's actually very immediate.
And they've actually moved the deadline forward
Yeah.
2 months.
Yeah.
So I think everyone was a little bit caught off guard from that.
Yes. Now, I think that will bring forward innovation, and OnLadder is a really good example of that. What else will come into the market is unclear at the moment, simply because we're now in a period of uncertain, not just rising interest rates, but we're uncertain as to what the end game is. I personally think we are in a spike, and hopefully in the next 12 months we'll see the situation in Ukraine become much more settled.
Right.
But if it doesn't, then that pressure on energy costs, which is driving inflation, and of course, energy costs isn't just our petrol; it's also the cost for delivering of goods, it's costs for farmers. So it feeds into the system all the way through, what we saw in the 1970s with the energy crisis then.
Yeah, I think there's always going to be uncertainty, and I mean the last 2 years are perfect examples of that. It feels like it's been one after another, and
Yes.
the human race in general is getting a new education in what can go wrong.
Yes.
But it's one for bringing it back to the mortgage market and trying to bring new innovations. House prices could continue to go up just because of stronger underwriting policies from lenders, stronger regulation, in order to to provide more resilience to the market, to make sure borrowers are able to afford their mortgages that they're being lent. That could put a floor under things, but also very well things could house prices could go down. But irregardless of what happens, there's going to be a need for new innovations to help people get on the housing ladder. There's going to be need for deposit loans. And this comes down to in a rising market, they need it because affordability has become incredibly stretched. But even when things start to go down a little bit, it's still going to be needed because mortgage lenders, they'll be reassessing their risk appetite.
Yes, they will.
And they'll be ratcheting up the percentage deposit that they're looking for.
Yeah.
and we're going to be right back where we started, but for different reasons.
Yeah.
So there's going to be, having a deposit loan, it provides flexibility in different markets for mortgage lenders. It provides value irregardless.
I think that's right. I think, as you say, in a market in the market where we have come from, the high level of prices has meant that affordability, even just on a 5% mortgage, is actually quite 5% of a mortgage is quite substantial. Even if house prices were to drop by, let's say, 10, 15%. Then, as you say, what would happen then is the regulatory framework for the market would tighten a bit. Lenders would be a little bit more anxious about what they were actually lending into. If I'm lending you 80% into a market where the house prices are starting to tip down 5% a year, I'm going to pull back a little bit because my risk starts getting quite close to the edge. So I think that's right. I think it works in both instances, yeah.
Yeah. But I guess to wrap things up in a bow, we just talked about a lot of different topics. And affordability is, for the foreseeable future, is going to be an issue, regardless of what happens, even if prices take a dip. Where do you see things going from here? How do you see this evolving? And is there any hope for first-time buyers?
Yeah, I think the fact that innovators like you are coming into the market is really good. And maybe not from your point of view, but the more of those, the merrier in that sense, because I think, a market, it really only operates successfully when it's bringing forward things that people need. And that's what OnLadder is doing. And I want to see more of that. I do think that although we're going through a blip in terms of supply, the appetite for the main house builders to expand what they're doing is there. And there's also a slow but growing number of people outside the main volume house builders. So I think we'll see more modular construction. I think we'll see more self-buy and custom build, where people are able to do that at a lower cost. It won't all be grand designs with Kevin. It'll be homes that actually people in more moderate incomes can afford. I think also when the pandemic sort of becomes a little bit historic, I still think that actually there will be some things, not least the pattern of how and when we work and where we work, is going to help to smooth some things out in the housing market. And people will have more flexibility about where they live. And that should help some of those locations that have perhaps been peripheral, and also help people regenerate areas. We're in an area now which 30 years ago was the back end of nowhere in London. If no one would choose to be here, now it's incredibly popular. And it's partly because the areas of the City of London became very expensive, and so people who were starting out looked for cheaper accommodation nearby. There was great stock, it needed renovation, but we see a fantastic array here of startups and other businesses now in this area. And I think that's an example of what you can do in addition to sort of improvements to the mortgage market.
That's great. Thank you very much, Mark.
Thank you.
Always a pleasure. Good to see you.
Cheers.